Hi everyone and welcome to Inderes TV. Today we're going to talk about Vaisala and the Q3 result with Analyst Pauli Lohi. Welcome.
Thank you.
The report itself was not any surprise because they had already given a positive warning before the publication of the report last Friday. But it was a good result.
Yeah, exactly. They told the preliminary, main numbers already 2 weeks before this Q3 report. But we knew the headline numbers. But I think there was positive market commentary in this Q3 report and also in their webcast. Mm-hmm. Both business areas were strong. And if you look to order growth, it was 21% in industrial measurements and 14% in weather and environmental side. So the weather and environmental side was a little better than what we expected. And so they are both doing good right now. They have, of course, many sub-segments. So the growth is coming from many sources, but if I want to name few, I think in the industrial measurement side, the life sciences is one area that is growing well because there's lots of focus on health issues. So bioscience and pharma technology, there's lots of investments needed currently. So that's one area.
Yeah,
of course, one segment, but then another one is in the weather and environmental side, the renewable energy. Because of the energy crisis, there's lots of investment into new capacity, and that's also one area where Vaisala is.
Yeah, so boosted by mega trends as well.
Yes, and of course, if we look into this result, there's also positive tailwind from the currencies because the dollar USD is getting stronger against euro, so that boosts growth, of course, especially in the US, but also I think probably also somewhat in Asia, and of course the strong USD increased the material costs, and that affects also negatively in some ways, but still. Quite a large share of Vaisala's components come from Europe, and the large share of the production is in Europe. So I think that they are a bit of benefiting from strong USD, and their cost side has not increased that much yet. But this is a bit of difficult to give a numeric value to this, but
that's the kind of the setting there. Benefiting from a strong dollar. So the currency adjusted result is something else than the real. But do you have any figures on that? If you look at the numbers, orders received up by 25% and net sales up by 20% on a year-to-year comparison. So are there any numbers on how much the dollar is?
The orders grew 25%. So in currency adjusted terms, the growth was maybe 18% or something. So it was maybe 7% through the currencies.
Okay. And you already mentioned there something about the operating costs were slightly higher and the gross margin decreased. But was that due mainly to the inflationary factors or currency?
Well, the component shortage has been burdening them during this year, and of course there has been variation between quarters. Q1 was super strong in terms of profitability, and then Q2 was maybe a bit softer, and this time also there was lots of extra costs because they had to buy components from the spot markets. But that's a business decision that they have done, that they want to serve their customers well and keep strong capability to deliver products. So they are ready to take the costs and
in order to keep the customer
happy.
Yeah. Okay, so that's a decision, strategical decision.
And there's variation between quarters, and you never should take too much extrapolation from one quarter to the others. And also they commented in their quarterly webcast that the component shortage might ease next year.
Yeah,
that was their feeling.
So this is transitory.
Yeah.
Even though it's going really well at the moment, historically this is a company that hasn't gone unaffected by macroeconomical outlooks and events. What do you think about the outlook for the future and say mid-term perspective?
That's a good question. Historically, they have been hit by economic crises or slowdowns, like in 2008 financial crisis or Euro crisis, COVID-19 crisis. They have always lost revenue and their profitability has decreased materially. But this time we are not expecting such a huge crisis to happen. I think that the growth figures are expected to decline, maybe go to zero in Europe, but still growth in Asia and other markets. And it seems that Vaisala is doing quite well still, despite the macroeconomic downturn, at least in Europe so far. And there's these macro trends which are driving their growth, and so far they have been strong and been offsetting the weaker macro economy.
Yeah, so you mean the trends are stronger than the potential
cycle.
Threat from the cycle. Yeah, okay.
At least so far, yeah.
Yeah. But what would you say about the valuation, and are there any specific factors you think investors should be paying attention to going forward?
Vaisala is rather diversified between various industries and geographical markets. So it's difficult to find a single indicator that would give a direction where we are going. The company's comments about markets were quite positive, and they're still expecting growth. We continue to monitor macroeconomic indicators like PMI and manufacturing and investment indicators, but this might give too negative picture about Vaisala in the short term. And it is possible that these strong macro trends will take them over this cycle with dry feet, and they can do pretty well. At least our current estimates assume so. But the valuation is rather high, around 18 EV/EBIT, which I consider still like it doesn't leave really much upside, taking into account that probably their growth figures are still going to come down next year, despite that it's not going to decline like the revenues and profits, but I still don't expect this very strong growth which has been in place last year and this year, probably not going to last over a longer period. Yeah. In the long term, the company has been growing around 9% a year, taking the last 5 years period. So I can't see a factor that takes the valuation down fast enough to see enough upside.
Okay. Thank you very much for all these comments, Pauli Lohi.
Thank you.